Welcome back to the Cygnet Capital Podcast, a weekly discussion for sophisticated and wholesale investors navigating the ASX and broader financial markets. Before we start today, I must give the general advice warning. As always, a reminder that everything we talk about today is general in nature and doesn't constitute as personal financial advice. Please do your own research or speak to a licensed advisor before making investment decisions. Past performance is not an indication of future outcomes or results. Cygnet Capital is an authorised representative of Cygnet Securities Pty Ltd, AFSL 241095. Cygnet Capital and its employees may hold shares in all the companies discussed today on this podcast. I'm your host, Sienna, and today I'm joined by Jonathan Rosham, John Cathcart, and David McGlashan to discuss uranium and thorium and the dual paths to nuclear growth. Jonathan, would you like to give us the commodities update for the week?
Thanks, Sienna. Well, it's been another busy week, hasn't it, in commodities land? Everything's absolutely flying. We've seen the US government looking like it might shut down, and it feels as if there's some geopolitical tension starting to mount again, obviously, with what's going on in the Ukraine, etc. Can't seem to get a resolution there, so there's certainly some feeling of geopolitical instability continuing. So precious metals, just strong bullish momentum again. Gold's up 43% year to date, silver's up 60% and breaking out. We've discussed that in the last few weeks, heading up towards $50. Obviously, we talked about that charting formation, the handle and saucer and handle formation. Looks like it's going to 50 plus. The gold silver ratio is at 81.6, and there's ETF and central bank buying. Uranium, there's a structural deficit expected through to 2029. Spots at $82 a pound. Long-term assumptions are around about 80 to 90, but chance that might go higher. Strategic stockpiling, supply downgrades and greenfield delays are creating tightness. And there's obviously some policy headwinds with the US and Canada progressing with nuclear initiatives. Copper and critical minerals, supply risks. We talked about Grasberg last week and the force majeure there. Codelco, Peru delays, issues in Peru. So there's strong demand, electrification and tighter supply. We had a real good talk about lithium last week. Ongoing project and policy developments. Thacker Pass in the US. We talked about Ioneer. Been some strong developments there and strong share price movements. And oil and gas was up around 5% week on week. Supply side drivers include Russia, diesel ban, and underproduction. So we talked about uranium, and as a result of that, we did some deep dive this week, didn't we, guys? And we found some interesting topics again that we probably weren't aware of before we did this work. So, David, one interesting thing that came to light that we identified was thorium, and the Chinese.
I think what the Chinese are doing with thorium could be quite a game changer. It'll still take a few years to play out, obviously, but initial indications from their 2 megawatt reactor in the Gobi Desert is looking pretty positive.
Yeah, John, thorium itself, John, it seems to be an element that's associated with uranium. Can you tell us a bit about thorium?
Well, thorium is reactive. It's more common than uranium. It's found in a common mineral called monazite. There's plenty of that around that occurs with rutile. So it's just a matter of extracting the thorium out and getting the new process set up to produce a fission from thorium as opposed to from uranium.
Yeah, but I mean, they're still in pilot phase, so there's a bit of work to go, but there's certainly some interesting stuff there which we'll touch on in a minute. But the macro outlook for uranium and thorium, we call it the dual path to nuclear growth, is undergoing a renaissance, with uranium remaining the dominant fuel for existing and planned reactors, while thorium obviously could be a contender, but still got a lot of work to do in terms of proving that up. But they've all been driven by decarbonisation, energy security, and the rise of this AI data centre power demand, which we've spoken about in the past, but it's just going from strength to strength. So the global demand drivers expected over the course of the next 20 odd years, requiring 391 pounds of uranium a year, up from 179 million pounds today. Small modular reactors, or SMRs, are forecast to contribute 49 gigawatts by 2040, with commercial deployment accelerating in the US, Canada, UK and China. The AI and data centres driving demand for clean, reliable baseload power. Reactor restarts and extensions in Japan, US, Belgium and Russia, extending the lifespans of their current reactors 60 to 80 years. On the supply side, we're seeing production downgrades from Cameco, MacArthur River, Kazatomprom, Paladin, Boss all struggled with production in recent times. Greenfield delays, hasn't been as much greenfield exploration of late, and some areas are facing permitting issues and financing hurdles. We've got secondary supply shrinking, so underfeeding and Russian material now immobile. And we've got the financial players like Sprott, etc., absorbing actual pounds. They're buying pounds in the market, which is tightening liquidity. So that's the overview macro of uranium. We've touched upon thorium quickly, but we'll just go through that. So China has made a breakthrough in thorium, as we discussed. The discovery of 1 million tonnes of thorium in the Bayan Obo in Inner Mongolia. They've got a 2 million watt molten salt reactor operational in the desert since 2024. So the next step is to produce 10 megawatt prototype by 2025 and full scale production by 2029. They claim that the advantage is 200 times energy density versus uranium, near zero greenhouse emissions, lower proliferation risk, and pretty safe considering they're using molten salt rather than water. Uranium remains the backbone of global nuclear power. The structural difference through 2029 supports longer-term price rises above US $90 a pound. That's what everyone's projecting. And utilities must accelerate their term contract to secure future supply, and it's looking like they may have to scramble a bit for that because, like I said, the financial players are actually buying physical in the market. Obviously, we talked about thorium before. We'll just touch upon that it's not yet commercial. The pilot projects are underway, but it's very interesting and obviously something that we'll keep an eye on. So why do we want to invest in uranium, or why do we want to be exposed to uranium? Rising electricity demand and nuclear revival. We're expecting electricity demand to increase 169% over the next 20 years. This is driven by AI, data centres, electrification, and probably the realisation that some of these renewables cannot support the energy required going forward. There's supply side imbalance. We've got existing committed uranium mines cannot meet the reactor demand for the next 10 years. So there's a projected shortfall of 700 million pounds.
Within the next 15 years.
Yeah. You're starting to get strong government support around the world, and hopefully some of the guys in politics over here might start to pay a little bit more interest.
I think
what they're doing.
the underlying factor here is that the world's trying to move away from carbon fuels, and carbon fuels have provided baseload power globally for as long as any of us can remember, really, way before our lifetime. And nuclear increasingly looks like the best option for replacement of that baseload.
Yeah, and look, we've got other issues like energy security amid these continuing geopolitical tensions, in particular Russia. The G7 is committed to ending the reliance on Russian uranium and fuel services. Where are they going to get the uranium from? It has to be, Australia in particular is going to be a major beneficiary.
Well, Australia has one of the largest reserves of uranium, particularly in Olympic Dam, and then up north with, there's a number of mines up there called Mary Kathleen Narbalik, which we'll talk about later. But just while we're talking about power production, the GE and Westinghouse produce these little 1 megawatt uranium plants. They're the things that power ships and nuclear submarines. And one paper I was reading suggested that you would just line a series of these up. It's proven technology. Just connect them all together, plug them into your grid, and away you go. Not a 3 Mile Island scenario.
No, not at all. Things have changed, and this perception of the fish with 3 eyes, etc., is probably a misconception from the past and maybe a bit of a conspiracy from the oil industry perhaps. But we'll go on to talk about what Microsoft, Meta, Google, Amazon, they're all investing in nuclear to power their AI centres. And the small modular reactors, like you just discussed, John, are really...
Plug one next to a data centre.
It's going to be the way of the future. We talked about the excessive amount of consumption of energy from the AI centres. The reliability of nuclear power as well, compared to a number of the other fuel sources, provides a consistent baseline power unaffected by the weather. It's clean and efficient, and obviously in the market at the moment, it's got a strong bull market momentum after a period of consolidating over the last year or so. So We had a call with our mate Joe David from Elementals this week, and we have a bit of an update on the Tasmanian project, the drilling there.
Yes, I think when we were talking about it in our podcast last week, we perhaps glossed over it a bit. Really, we were focusing on the fact that the second hole they drilled didn't pick up further evidence of a higher VMS type deposit in the top of the hole, but it wasn't really the focus of that hole. And that hole really went on 700-800 metres, I think, in the end, and got down below the tungsten resource that they've got, and really intercepted some quite good widths of tungsten, fluorine, bismuth, moly. So there's a lot of stuff there that they still
I think they're pretty
positive about.
Yeah,
And they're still waiting on assays on those, aren't they?
They've done a bulk test,
to the uni there in Tasmania, and they're expecting some results back. But with tungsten and these critical minerals being in such demand at the moment, obviously short supply.
We'll
really keep an eye on what's going on there.
And we like Tasmania as a mining jurisdiction. They're very pro projects
Absolutely,
there.
they are. Yeah, absolutely, they are.
Looking
With
forward to
keen
those
interest
results.
in seeing those results.
Yeah.
Anyway, we'll continue on now with uranium. And we've reviewed 3 stocks this week. We decided to stick to the explorers, really, because this is where we think the most leverage in the uranium market is. A lot of the big producers are facing a number of issues in relation to production, etc. And we think that given the position of the market at the moment rotating towards more leveraged speculative positions, we think these uranium explorers are the way to go. So just talking about one in particular that we know well as Koba Resources, we're involved with the acquisition of these assets from Havilah a couple of years ago. We spent a lot of time doing some work on uranium, looking for the best exploration assets we could find, and we did do a worldwide search. We came up with a couple of findings, didn't we, Dave? That is South Australia and Australia were probably the best jurisdiction to look for uranium.
Great part of the world. Obviously, we've got a good chunk of the world's uranium resources in this country, and in South Australia we've got a mining environment that is already permitting that.
And up into the Northern Territory.
And up into the Territory, correct.
So the flagship asset is the Urambo Uranium Project. It's over 5,000 square kilometres with over 250 kilometres of paleo channels. 17 k's north of Boss's Honeymoon mine. Got a project there, got a deposit being mined currently. Admittedly had a few issues of late, but still there's a processing facility there. It's 120 k's southeast of Beverley's uranium operation and adjacent to greater than 250 million pounds of uranium resource in the Froome embayment. You couldn't get better address. The maiden drilling program, they had 123 holes of 1,280 metres, 3 high-grade discoveries at Everest, Berber and Shivers, multiple intersections greater than 1,000 ppm uranium. At the Oban deposit, there's a historical resource there. They've had recent intercepts, including 2.2 metres at 2,236 ppm, 2.65 at 1,174, and 2 metres at 1,500 ppm. Look, these are pretty encouraging results, albeit there's a lot of smoke there. It's finding the economic quantities of the uranium that's the time-consuming task, but there's certainly a lot of interest there, and they've come out with some recent results which are quite exciting. Dave, can you just update us on those, please?
Koba have come out with some recent results where they've been stepping out, trying to link up their project at Oban and then further to the southeast down to the Berber project. There's 1.5 k's of paleo channels in that part of the tenement package, which really hasn't had very much drilling in it at all. And the early indications are very positive. They've got 1.1 metres at nearly 700 ppm, and that includes half a metre at over 1,000 ppm. The drilling results that they've announced there, I think, warrant further follow-up. I think we'd like to see them go back in and do a bit more.
Yeah, and Dave, they talk about a roll nose formation in relation to the geology. Can you explain that a bit?
So what they're trying to find is the front in the mineralisation, in the paleo channel, where you get the best accumulation of uranium, and that tends to be right at the point where it hits a redox zone and it drops the uranium out, and with any luck accumulates it in thicknesses that are economic to mine.
So this roll nose that they call geology-wise, that's an area that in South Australia has been known to represent very significant mines.
That if they can identify a roll nose environment and then scope out its scale, its strike and its width, that's where they will find good economic resources.
So, Koba is an early stage explorer, but gee, if the uranium market continues and they're looking for juniors, this has got the best address going around just about, hasn't it?
Well, I think being in South Australia gives them the best opportunity for being able to bring resources into production, because the political environment's positive. There's existing production. They're not that far away from the existing production, which means you might be able to link it into something that's already going as an extension to resources.
Sure.
All those things are positive.
That's right.
Whereas Western Australia, the government's against uranium mining, and projects that exist there aren't really going anywhere very quickly.
And that brings us on to our next topic,
It
doesn't it?
does.
So Toro Energy. Toro Energy is market cap around 44 million. They've got around 7 odd million in the bank, so they've got enough to continue on for the minute. They've got the Lake Maitland uranium vanadium operation. It's actually a project that's been well defined. I think they've been doing some more work on it, but it's very robust. The only problem is the West Australian government won't let you mine it. But nonetheless, John, do you want to just quickly take us through the economics of that and your view on what might happen over in WA?
Well, as people get more comfortable with uranium, and of course change of governments can change policy, although the WA government is Labor and very well entrenched, I think common sense will prevail eventually, and that they will get the necessary approvals. In the meantime, as you say, it's an option on the uranium price and a pretty robust project.
Looking at it, NPV was almost $1 billion. John, you talk about an IRR of 15 to 20% being pretty good. This has got an IRR of 56%. Payback period 1.5 years. CapEx not that expensive, really.
Well, there's stunning financial statistics, which goes to show that there's, at some stage this will get developed.
Yeah, I mean, they talk about CapEx of 300 million, which is not that much. Annual production, 1.3 million pounds of uranium and 750,000 pounds of vanadium.
Oxide.
Pretty good. Cash costs being around $20 a pound. Uranium price assumptions being around 85 is probably a bit ambitious, but probably based upon what we've discussed going forward, it may not be. So they're in an interesting situation. Obviously, regulatory there, it's the issue, and I think that once the uranium situation in WA is lifted, here's an example of another one that we try to find that's got a lot of leverage to a change in policy, to change of environment, change of prices, to really get a re-rate in the share price. So,
well, I think as the people who are anti-uranium realise that uranium is the only source to decarbonise the world, once that opposition wakes up to the science, I think we'll find that uranium projects will start to get approved.
They might need to get cold first.
Yeah.
Cold and dark.
So Toro is positioning the Lake Maitland project as a low-cost, high-margin uranium vanadium operation with very strong economics. We've talked about the regulatory headwinds. We've talked about a bit of funding uncertainty. We talked about market sentiment being the key risks.
Don't forget the Japanese are already in there,
And that's
I
true.
think if the regulatory environment improves, the Japanese might be standing by, ready to support the project.
Absolutely. All right. Let's go on to DevEx.
Okay, well, DevEx Resources, the code is DEV. It's an explorer based on uranium and rare earths. Market cap's modest at about 39 million, and there's $7 million cash in the bank. They've got some strategic investments, 26% in Lachlan Star, which by its name is exploring in the Lachlan Fold Belt in New South Wales. But one of the winners here, and you always follow the people sometimes, and I'm a great fan of Tim Goyder, who's behind Chalice and Liontown, and he has a significant investment in DevEx. And the managing director is Todd Ross, who's got a lot of experience on the finance side. So let's have a look. Jonathan's discussed the macro for uranium, so I'll skip over that. Let's have a look at what DevEx has got. The Narberlek uranium project is in the Northern Territory, so we like the jurisdiction. You've got the old Mary Kathleen, which was a historic uranium mine up there. And historical production, 24 million pounds at a decent grade of 1.84. Recently, they've had some drilling intercepts like 6 metres at 6% uranium oxide and another one at 4.8 at 1.9. So basically they're targeting unconformity style deposits, similar to the Athabasca Basin in Canada. Very well known model. The Northern Territory government's keen. They're co-funding some of the maiden drilling projects at projects called Mount Big Radon, and also they have another project called Murphy West, which they're running into. It's also in the Northern Territory. This is a big radiometric anomaly up to 2 kilometres in length. Both styles of uranium deposits are here, unconformity or in Westmoreland style. So what are they doing? Well, they're doing surface geochemistry first to guide the drilling, so we expect to see a news flow out of there.
Yeah, so they've also got this Kennedy project in Queensland, maiden inferred resource of 150 million tonnes at 1,000 ppm total rare earths. It's basically a shallow ionic clay hosted type deposit. It's located very close to infrastructure, and it looks like the Queensland government can give it support for some metallurgical trials, and it obviously aligns with global demand for critical minerals at the moment. So in terms of strategic positioning, John, what do you think?
I think moving to the future, uranium for power generation and the rare earths are required for a lot of the complex technology in electronics. So this is a company that's positioning itself for the future.
They've got some drilling coming out at Big Radon, surface geochemistry results coming out as well, a potential resource at Narbalek, and potentially some strategic partners. So we quite like that one as well. They're a little bit subject to what's going on politically, but certainly one to keep an eye out on.
Moving on to the next section, big hits.
That's a big hit.
Thank you, Sienna. Yeah, it was another very big week. We're starting to see little companies getting rewarded for good results. Share prices moving quite significantly. Volume coming into the market. Just like the good old days, Dave. We haven't seen it for a while. We're starting to see it again.
It's been a long, cold winter, Jonathan.
Very long and cold. Happy to say we're starting to see some action. So, this week, Terrain Minerals up 33% on high-grade gold hits at Lightning, 13 metres at 8.13, including 2 at 48. They've had an 80% success rate from their drilling. They've got silver results pending. An exploration model is being validated by IP targeting. So very, very interesting. Good to see them moving. We'll keep an eye on how they're going. John, Broken Hill Mines. We've talked about it before in the podcast. It's on our watch list.
Well, we've liked this so much that David and I are going to visit the project next week. They 70% own a polymetallic asset, 6 million tonnes. They talk in zinc equivalents. That's because you've got silver, lead and zinc, and they just wrap it up to give you one number to comparison. But let's say recent assays, 3.2 metres at 37.3% zinc equivalent. That's pretty amazing. 17 at 10.4, and they've got some very high-grade historical hits as well. Drilling's continuing. We expect a resource upgrade in early 2026, and given it's shallow, near-term open cut production is possible, and then after you've mined the open cut, you then use that as your portal to proceed to underground development.
All right. Well, and Teepa, they had a couple of good hits too. 12 metres at 16.7 and 0.13% copper, and 18 metres at 2.7% gold and 0.49% copper. So they're looking interesting as well. They've got a chance of potential some consolidation with Greatland Gold being up there and Telfer obviously. Somerset Minerals drilling 42.7 metres. This is a beauty. 42.7 metres at 2.69% copper from 15.2 metres. 7 holes of pending essay up there in Canada. Canada's got the ability to come up with these type deposits, John, VMS style.
Volcanic massive sulfide. They normally occur in clusters. This company's got a large land holding at nearly 1,700 square kilometres. Assays are due for 7 holes in the next sort of 6 weeks, and they've got some geophysics from electromagnetics and IP surveys. So this is pretty exciting. They'll process this data. Phase 2 drilling campaign is being planned, and look, there's surface samples that are high grade as well. So one to watch. We think it's undervalued. It's in a tier 1 province looking for thick high-grade copper. They've got a large ground position, so district scale, bonanza grades. We are very encouraged with what we see, and we are meeting with the Managing Director next week.
Moving on to the next segment,
Tigers with spots, hey Dave?
We like tigers with spots.
We do, but this one's got less spots than it had originally. But anyway, it's still a tiger with spots as far as I'm concerned. Savannah Gold. So we were joint lead managers on a recent $15 million raising with Bell Potter. Savannah Gold's chairman is a great old friend of mine, Stephen Bizzle, who's Cygnet and Stephen and had great success over the years. In fact, I think it was the first deal Darren and I ever did was with Stephen Bizzle. Went through a period with Stephen in the mid-2000s where there was a lot of stuff going in the coal seam industry. So when Stephen came to me and said, Jonathan, you should have a look at this. I've had a few problems with it, but it might be on its way to being remedied. We rubbed our hands with glee and said we'd happily look, Steve. And I've got to say, when I looked at it, it definitely had some spots because it had got itself into some trouble with some floods, which weren't necessarily their problem, but essentially the mine shut down because they couldn't truck the ore between the ore bodies and the plant.
I think they suffered through two what they regard as 100-year weather events, didn't they? They had cyclone after cyclone come through and a river that's normally dry separating the mine from the processing plant. Made life very hard for them.
It did, and it put them under a lot of financial stress, but Stephen and a number of the other shareholders really put their shoulder to the wheel and put their hand in their pocket, and really a lot of other companies probably would have gone broke. But the reality is that they actually had some fundamentally good assets there. Number one, they got a plant, which means they can process the ore and generate cash, that was producing cash prior to the floods happening. There's material that was actually stockpiled ready to go into the mill when this happened. They've got good deposits and they were mining this in a completely different gold environment as well. So we looked at all this and we thought, gee, they're probably the thing that fixes this in the short term's money. So they raised 15 million on a market cap of 15, and it was an interesting exercise and some very smart investors got involved at the time. So that allowed the company to clear away some of the debts and move towards production, and we're starting to see a scenario where the market's starting to appreciate probably that it's at a situation now where it may have overcome a lot of its previous problems. They're going into production in next month. They're going into production at the end of the month.
October.
So we believe that over the course of the next coming months, they could generate at conservative gold prices, 4.5 million in free cash flow. The plant has the capacity to produce around 220,000 tonnes, which is about 15 to 20,000 ounces annually. Now that might not sound a lot when you compare it to the WA big plants, big producers, but gee, at these prices, that's hundreds of millions of dollars worth of, cash flow coming to the company potentially.
So, and they're the only plant for 400k, so
which allows
that's
them,
quite important.
Which allows them the ability to potentially do toll treating deals with other stranded ore bodies there. So they're in a strategically very strong position because they've got a pretty robust mineral resource base as well. Total resources now stand at 541,000 ounces across multiple projects, including Agate Creek, Red Dam, Electric Light, and Big Reef. We talked about the management, Steve Bizzle, our association with him, we've got great confidence in him. But Brad Sampson's just come on board. He's the chief executive with over 30 years experience in project development and operations. He looks like he's doing a terrific job. So in terms of growth opportunities and strategies, we have seen that they've just been given environmental clearances, which will unlock the ability to actually mine. They've got some significant exploration upside at all of the deposits I mentioned before, being Big Reef, Red Dam. They've historically produced very high grades of oxide ore, and there's great potential for the sulfides at depth.
I think they're going to look at adding a comparable sulfide circuit to this gravity plant, and they think they can do it for under 5 million. And, I think if that turns out to be the case, it really turns on a whole second stream of cash flow from the sulfides.
The sulfide results and the sulfide intersections historically have been unbelievable. So if they can unlock the value of that, there's no value of that in the share price as far as I'm concerned. You've got the Agate Creek low-grade material. Now, at these gold prices, if it continues, it's a big bulk mining operation. Sure, they may have to generate another plant, but that has got 500,000 ounces near enough of sort of low-grade material that can be processed at a cut-off grade at 0.2, Dave?
I think that it'd probably get down to that. It would need a plant on site to process that material, but let's hope they get the opportunity to evaluate that.
Absolutely. So major shareholders is Stephen Bizzle. Wes Mass, well-known mining entrepreneur, very successful guys on the register, and a number of Australian institutions are there as well. Valuation snapshot. Well, we went through a few key items, but basically we think that based upon what they've got in the ground, the plant, believe it or not, they've got $153 million worth of tax losses as well, which means they won't be paying tax for quite some time. We see potential for multiples of the current share price. So as far as Tigers with spots are concerned, like I said, it had a lot more spots when we first looked at it, but it's still got a few.
Moving on to our watch list. What's on our list, Jonathan?
So the watch list, we've had a pretty good week really, haven't we? Those rapid critical minerals, we got 3.5. I mean, they're above 7 cents. And the Carnaby, well, they're heading up towards 40. So our charity's doing particularly well. We put Broken Hill Mines on there. We really like Broken Hill Mines. We talked about John and David going to mine site. They've just got away from us a bit, but we're still going to keep them there. Stellar Resources, 2.7 cents. I think they're another one that we're waiting for an entry price. They're just not quite there yet. Ballymore Resources, I think, are almost a buy. They've been a bit sleepy. I think just some delays in relation to getting some government approvals, but gee, they've got such good ground and such good potential that I can't help but think anything around 14 to 15 cents is a good buy. Zenith, raised some money, going well. Still on our watch list. David's Western Mines, still watching them. They're performing pretty well.
Still watching them.
Still on the watch list. We put Ioneer on there last week. They've got away from us a bit too after our meeting. And are we going to put anything else on the list today?
I think we should put Koba on the list.
I think we should put Koba on the list.
Given what's going on in uranium.
Let's put Koba on the list. Right, trades. We don't have any money because it's locked up, but we've got profits. So what are we doing?
Might be time to crystallise some profits and get ready for the next investment.
I'll tell you what, silver's run pretty hard. There's probably more in it, but these rapid critical minerals have doubled. So why don't we take our money off the table in rapid critical minerals? 150,000 shares. Is that right, Sienna?
I got it in my notes because I knew you'd ask, Jonathan. 120 in RCM.
120,000 shares at 3.5. We sell them above 7 cents. That's doubling our money, isn't it?
Lock it in.
Let's lock that in. We'll
Good
bank the
plan.
profit.
That's right.
Carnaby, I think we let them run.
Yeah, I'd let Carnaby go. They're
There's a
pretty
strong
early
news flow there.
Yeah.
Okay, let them run. All right, anything we want to buy? Should we buy some Ballymore with
I
our
think
money?
if Ballymore gets weaker, we should be buying it. I guess the question is, do we buy it at the current market?
Great ground. We like the management, and we feel that there'll be a strong news flow.
All right, well then let's go and buy. How much money do we have?
8,760.
Okay, let's buy 50,000 shares in Ballymore and we've got $1,000 in the bank.
That's the last trade.
Yeah, our Carnaby position's going very well. We bought 200,000 shares at 29 cents. They're up heading towards 40. We're up $20,000 on those for our charity. I think we're going to still hold them, aren't we?
I'd like to, I think.
Yes, I agree.
They're very active on the ground, and I think we should hold for those results that'll be coming through.
I agree.
That's a wrap for this episode. Let's talk about what's coming up on the next episode.
So, fellas, you're going away on a couple of field trips, going to see some mine sites. How about we have a chat about zinc and base metals next, given that you're going to Broken Hill?
I think that's a great idea. We'll be back about the 15th, so that'd give us a chance to sit down and have a chat about it.
John, you happy with that?
Absolutely. I'm looking forward to the Broken Hill visit. Topical in terms of both the commodities and a great mining jurisdiction.
No worries. Well, I look forward to that as well. I'll sit here and hold the fort, or you guys go out into the field. All right. Well, look forward to next episode.
As always, a reminder that everything today we've discussed is general in nature and doesn't constitute as personal financial advice. Please do your own research or speak to a licensed advisor before making investment decisions. If you're enjoying the content, make sure you join us weekly for updates. And just as a reminder, this is a space for wholesale and sophisticated investors only. We'll catch you next week for more on the markets.